Well, hello again, Solis Wealth family. Greg Solis here with the update. And I'm excited today because I got my good buddy here, Luis Carrera. For those of you that don't know Luis has been with us, hard to believe, almost 2 years. It's crazy. Time's flying. He's got about 2 decades of experience in the industry. He's one of our lead financial advisors here. He serves on our investment committee. He's been a tremendous asset. So if you haven't met Luis, you need to meet Luis. He's a great guy. A lot of you already have met him and you'll be hearing from him, some of you on a more frequent basis, but I wanted to make sure Luis was here because he's been a great team member. So I wanted you to hear from him a little bit about what he sees going on in the markets and what he sees in the economy. And so Luis, it's been a crazy couple of weeks. I mean, unbelievable what's happened here. We had a roaring back, surge in the markets after having a pretty big pullback. Market was off from peak to trough. The S&P 500 about 8.5%, the NASDAQ almost 14%, and we're just 1% or 2% off of our all-time highs. What in the world is going on?
Well, a lot of volatility. We've been talking about this for the last year and a half. It's been expected, and of course, we're in the middle of the summer as well. And of course, we're in the precipice of Fed starting to cut rates. And that is bringing a lot of uncertainty in the markets. We didn't know just a few weeks ago, we weren't sure the Fed was going to be this hawkish, or we believe it's going to be hawkish about starting to cut rates soon. Now we have a little bit more clarity on that. So we think that the Fed is going to start cutting rates in this coming September meeting. And that, of course, is making the markets take a little bit of a breather and recover a little bit of the ground that it lost in the past few weeks. But a lot of other things, of course, to look at and consider, as you know.
Well, tell us what's going on with the economy. Is the economy getting weaker, stronger, and what is the market telling us in regards to that?
Yes, that's a great question. So if you look at GDP figures, GDP is actually relatively healthy. We think that the economy is in a good spot. Earnings season just wrapped up, just about to wrap it up this week in its entirety. And it was a decent earnings season. And so we do have a tailwind in there. We also know, typically and historically, a lowering interest and easing interest rate environment can lift equities. And so we're thinking, as we know, the equity markets are an anticipatory mechanism, right? They're trying to look into the future, the next 9-12 months of what will happen with this economy. And what the stock market is telling us is that there's optimism into the future.
Yeah, absolutely. Yeah. But there's cautious optimism because there's incredible volatility. It's just been amazing. It really has. I've been in this business, as you know, for over 30 years. And I got to say, this last month was one of the more volatile times I think we've seen, with that 14% pullback and then getting it all back in really a couple of weeks. Pretty amazing. Absolutely. So what do you think? I mean, looking into, I know we don't have a crystal ball here, but if you were to try to make some projections into what you think might happen over these next several months, and particularly going into 2025, what do you anticipate?
Well, we talk about this a lot here in our investment committee as well. We have some, as you say, some cautious optimism. As I mentioned, an easing interest rate environment usually helps equities. And so we're feeling that we're gonna have a good end of the year from here on, and we're feeling that we'll carry that momentum into 2025. Of course, always very cautious about any geopolitical events that may arise, and not to mention we're going into an election end of the year, and that typically brings up volatility. We know historically they don't affect the markets in the long term that much. However, in the short term, there'll be volatility.
Yeah, for sure. Yeah, I feel the same way. The good news is I was taking a good look at the accounts when we were taking that pullback. Amazing how well our portfolios hold up during those pullbacks. Real quickly, give us in a nutshell, how come these portfolios hold up as well as they do during these volatile times?
Well, I got to give a lot of credit to our Solis Wealth Management clients, because they actually stay the course. Yeah. That's important, right? We have these conversations on an ongoing basis. Don't react to the quick moves of the market of the day to day. But our portfolios, we often talk about this. We build what we like to refer to as all-weather types of portfolios. So yes, incredible volatility on the way down and on the way up, and our portfolio is kind of holding real well. because of that conservative allocation.
Mhm.
We want to prosper when the market is doing well, but
Yeah.
we also want to protect when the market is difficult.
Yeah, there's so much discussion that goes on behind the scenes about how to optimize the allocation to help try to reduce the risk as much as we can and give an opportunity for a reasonable rate of return. So we're doing well. I could say that things are moving along nicely here. Accounts are doing what they should be doing, and so we appreciate you. We appreciate you being here with us today,
Thank
Luis, and appreciate your trust and confidence. Always know we're here for you. My very best to you and your families. Take care and God bless.